Good morning and welcome to this week's edition of the Ashworth Wealth Weekly Market Update. Welcome everyone. Thank you for joining. Today is February 14th, 2023. And we'll jump right into our chart that we have today. And we'll look at both of these charts as we kind of try and pick apart what's going on in the economy and where we're at and what's happening with inflation, with interest rates rising, etc. And the first thing that I want to point out to you is that with the S&P profit margins that we have right now, we have fallen down quite a bit from where they were in 2022. But at the same time, we are still maintaining a fairly healthy profit margin in corporations relative to what has happened previously for the last 25 years. And so even though profit margins have come down a little bit, they still, in relative terms and in historical terms, still are staying quite high. That's good and bad for the economy. Good because it just means that the corporations do have some pricing power. They have some resilience in the face of what we're going through right now. And that leads to the next stock or the next chart. If you look over here, the blue indicates the percent of companies that intend on increasing prices within the next 3 months. Again, you can see that it has come down substantially over the last quarter, but at the same time is still quite a bit higher than it has been for the last 25 years. And so the trend is correct as far as trying to reduce inflation and trying to get inflation down. But you can see from this that we still have a little bit of ways to go in order to get inflation back to where it needs to be. You can see here in the green, plans to increase compensation. That has come down a little bit, which also will reduce inflation. And then higher sales expectations. You can see that this has bounced back a little bit from this quarter, from where it was in its low point. And is lower than it has been for quite a while, again, the last 25 years. So as we talked last week, we talked a little bit about mixed signals. This chart is an exact example of those mixed signals, because on this part, they don't expect to have higher sales, but at the same time, they're projecting that they want to increase prices. And so it's indicating that the economy is slowing. As the economy slows a little bit, inflation will come down. As inflation comes down, the Fed will ease off the gas pedal a little bit with the raising of interest rates. We do anticipate probably 2 more interest rate increases this year. And there's talk right now that the terminal rate, which means that the highest that the Fed will raise their rates, will probably go up a little bit higher than what the expectation was at the first of the year, just because inflation's a little bit more sticky. The bonds seem to have already priced that into the marketplace. But the thought process is that the bond market the interest rates for the Fed probably won't come down this year. That's kind of what we're hearing from many different sources. And that means that the recovery may take a little bit longer than what we had originally had hoped for, or what the economists had hoped for. And so it's just kind of it is recovering. We will get back. The markets are doing kind of what they do in these type of situations. And our job is to help you the best that we can to navigate through this and to make sure that you're getting the best bang for your buck as you go forward. And also, again, just reemphasizing that it's your goals that we try and help you accomplish, not necessarily in a straight line, because we know that the markets don't go in a straight line. But as long as long term we are helping you accomplish your goals and your financial objectives and those type of things, that is our objective, to help you through that. So with that, thank you so much for joining us. As always, if you have friends, relatives, co-workers, neighbors that you feel like might benefit from our weekly market update, please feel free to forward that to them. And with that, thank you so much for spending just a little bit with me this morning, and we will see you next week.